back to Reimagine 2020 version 5 here as we round out the end of 2020 as a year. What an exciting time it's been, both in the crypto space and beyond. And so in honor of such an exciting time of the year, I'm joined by none other than Raoul Pal, an incredible investor, thinker, economist in the space. This is a man who famously, or perhaps infamously, retired at the humble age of 36, but here he is back in the game and back at the cutting edge in innovative space. Firstly, Raoul, I'd like to thank you so much for joining us here at Reimagine 2020.
It's great to be here. Looking forward to it.
All right. So to kick things off, I would be remiss if I didn't mention some of the recent comments, both on Twitter and in various interviews that you've been making in and around the crypto space. So we're recording this at a time when Bitcoin has just tapped its all-time high. By the time this interview actually goes to air, who knows where we're going to be in the space? And here you are doubling down, a massive amount. What was it you said? Was it 98% of liquid assets in the crypto space? Tell me about your current portfolio allocation and your thinking that led you to this pretty staggering and headline-worthy news.
Look, I'm a macro guy. So, I'm not a crypto native, although I've been in the Bitcoin space from 2012. So I've been around in it and out of it for a long time and have understood its evolutions and have been following what it's all about. So I was living in Europe in 2012 when we almost lost the banking system, and realizing how screwed everything was. That came out in 2008, and the only answer was more central bank printing. But there was not only that, it was the lack of knowing who owns what within the financial system that was a huge issue. And I was looking at the time to start the world's safest bank. A few of us got together, looking at figuring if we can have a non-fractional reserve bank that basically secured assets. And then a friend of mine who was a client of mine for Global Macro Investor, my research service, said, hey, listen, have you looked at Bitcoin? And once I started going down that, I realized actually this would answer a lot of the questions for secure ownership of assets, plus giving us a alternative way out. Plus, it was a store of value that would act in different ways. So I'd been following the story from then, had been investing on and off. And then what I'd realized was that probably by about 2015, 14, I'd realized that the macro and crypto worlds were going to collide. And that was going to happen in the next recession because monetary policy had got to the point where what more could they do? More negative, more printing. And I realized, okay, this is coming. So I had been out of the space for a while. I sold out into the rally in 2017 and just sat around waiting and watching and learning. And then eventually started to see we were headed to a recession back in 2019, started to refocus on Bitcoin, understanding its value proposition when this happened, also the halving events as well. And then once COVID became absolutely clear. So I used that big sell-off to get what I call irresponsibly long Bitcoin. I then started adding some Ethereum, and right now, I've just kept building the position. And what's happening is Bitcoin's dominance versus all other assets is so ridiculous right now, meaning it's outperforming everything, including the central bank balance sheets, including gold, including equities, everything. So in which case you get to a point as a macro guy where you're like, okay, this is really outperforming. What is the fundamental best trade to represent all of your views? So there's a bunch of views out there. Mine is deflation, insolvencies, problems with banks, more monetary printing to solve the deflation, etc. Well, that's very good for Bitcoin. But let's say I'm a total idiot and it's the opposite way. Inflation, we've overstimulated, the economy comes back to normal. Well, in which case it's probably very good for Bitcoin too. So the only outcome I see that wouldn't be good is the situation of, let's say, everything returns back to some sort of normality, the dollar doesn't move a lot, and everything is normal. Well, that's after the biggest recession of all of our lifetimes. It's pretty unlikely. So I'll take that bet. So it became a bigger and bigger bet. And, I did have gold, and I've still got a few bonds, but really I realized that this bet was going to be huge. And then I split it 80-20 between Bitcoin and Ethereum. And the reason I did that is Bitcoin I see as the world's most pristine collateral. It's a perfect kind of safe haven asset, even though it's volatile, but it's so skewed to the upside. But Ethereum has a lot of other applications that people are working on. I understand that that's true of Bitcoin too, but Ethereum seems to have an edge in that, and I wanted a share of that platform. I don't think of it in the same breath as Bitcoin. I think one as a reserve asset and the other as a platform.
And I want to drill down into your sort of breakdowns within the market in a moment, but I want to also firstly hit on a point you just made there. We talked about, obviously we all saw the massive dip and dive that the market took at the start of, the coronavirus as a worldwide pandemic and epidemic. But here we are standing at the moment, towards the end of 2020 with, certainly US markets retapping all-time highs under various metrics. And while there are certainly a lot of concerns out there, what as a macro, investor, as a macro thinker, do you look at those sort of swings and roundabouts and see that, as optimistic as, let's say, the still president of the United States sees it?
Look,
how do you think?
Our job here is not to judge what the markets do, but understand how people will react. Who are the key players in this space for our thesis about cryptocurrency to play out? Well, the key player in all of that is two people, the government and the central bank. Nobody else matters. So whatever the stock market does is irrelevant. So what matters to the central bank and the government? Solvency. It is the loss of revenue from people who are furloughed or out of jobs. It is the closing down, temporary or permanent, of small businesses, which are the mainstay of the global economy. So regardless of seeing Tesla go to all-time highs, it doesn't matter, because a government's job is to essentially help the people. So the people here, the average person, is getting killed. So therefore, the reaction function of the central bank and the government is going to be to do more stimulus. Now, the central banks are starting to realize that injecting more money into the banking system doesn't find its way to individuals. It finds its way to people who can already borrow money. So we know that governments are starting to do more direct spending to individuals and small businesses, and the central banks will backstop it. So I kind of ignore what the equity market's doing. Look what the broad underlying economy is doing, where we're still growing at -5% year-on-year GDP around the world. So people get confused with this Q on Q print. Oh, we're growing at 34%. It's not how it works. It's a year-on-year growth. This is still currently worse than the financial crisis. This is currently the second worst recession, depression of all recorded history for major markets. So that's not going away. The overhang, particularly with the virus lingering around, more restrictions in economies, or again, the behavior of people to avoid things, avoid going out, avoid spending, means that economic growth remains slower for longer, which increases the propensity for central banks and governments to do more.
I want to move back to the crypto space as a whole, but before I do, when I'm with such a prestigious macro investor in front of me, I can't help but ask, is there not a chance that governments can employ the sort of large-scale spending and investment projects that were characteristic of, let's say, the 1930s and the Great Depression, that maybe helped to restart the economy then? I know I'm being reductionist here, but is there not a chance that we could spend our way out of this if the finances were allocated a little better?
Whether we could or should is almost irrelevant. Whether we will try is almost fact. And again, as a market participant, that's what matters to us. Right. Because a lot of people, you see a lot on Twitter, it's like, they shouldn't do this, they should do this. What will they do? They've been telling us all along that they want to spend more money at government level, whether it's in green investments, whether it's in direct payments to people, that's all coming. But with governments at record debts, which was not what it was in the beginning of the 30s, we're now at all-time record highs of debt globally. So you're adding debt on top of debt. And that is the thing we need to think about. Okay, what are the unintended consequences of that, and how do we play that? I think some of this will work. I'm not a, I understand the monetary issue involved in this, and that's why I own Bitcoin and I used to own gold. But from a macroeconomic perspective, I honestly think it will help. It's better than doing nothing.
Certainly, potential change for governments to play a certain role in the future. But all right, let's cut back to the media. Let's cut back to the crypto space. Now, you recently, back in August, gave what you titled the ultimate masterclass for macro investing alongside Diego Paria. I had a look at that interview you had that with him in that masterclass. Fantastic stuff. But I want to note something. In that sort of analysis. Parias talks about putting a 5% portfolio allocation dedicated to outsized returns, using what he calls the goalkeepers for his portfolio. Now, you've obviously seems to have taken that, if my understanding is correct, and I'm no expert here, but you seem to have taken that sort of outsized returns approach to a greater degree, much beyond that. Are you sort of going against the advice that you're giving out to the public with your own ideas, or is this part of a wider strategy? And so, could you break that down a little for us?
Diego runs a portfolio. So he is an institution. Mm-hmm. So he has parameters of which he can operate. If you ask Diego what he runs in his personal account, it'll be different. So for me, when I looked at this whole setup, so the whole setup is we have this rare asset. We've got this economic backdrop we've talked about. We've got this stock to flow model, which whether Plan B's model is entirely correct or not is irrelevant. It gives us a decent framework. The technical analysis stacks up. The flow of funds. I mean, I've never seen the amount of people coming into a space before, and considering there's almost no new supply. That sets us up for what George Soros famously calls a reflexive loop. So reflexivity here will be the fact that the more the market cap goes up, the more institutions need to own it. The more they need to own it, the more the price goes up. The more anybody who owns it outperforms, which drags in more people as the market cap goes up. And this doesn't stop for a while. It's a classic bubble formation, and fine, we can go into another bubble phase. But the point being is that this reflexivity is incredibly powerful right now. And I've literally never seen anything like this in my entire career. So when you get given the biggest opportunity you've ever seen, the skewness of the upside versus the downside, you take it. And so when I talk about being irresponsibly long, again, I don't use leverage in a bet like this because you need to be able to suffer 50% drawdowns in 5 days. So I also have income streams, 2 or 3 income streams. So I know if I get this bet wrong, it's not going to wipe me out forever. I also have other assets. So basically, it's because I can afford to take the risk I can. Should other people? Yes, depending where you are in your life cycle and what risk you can take. If you're a 28-year-old and basically you've got 20 grand in savings, go for it. Why not? You lose your 20 grand, it's not going to change your life. Yes, you'll have to rebuild savings. You're not going to lose all of your money, so you lose 10 grand. That's fine. Trust me, by the time you get to 35 years old, that'll be a small part of what you earn for a living. So take that bet because it could be life-changing. You can buy a house. Buying a house is about the best single thing on earth you can do because then you've got somewhere to live. Shelter is one of the key components of Maslow's hierarchy of needs. So there's so much here for people. It's different when you're in your 40s, you're trying to figure out how much allocation. It's going to differ for everybody.
All right, so then I want to talk about what you just mentioned there, this crush coming into the space and this rare opportunity as you see it. I mean, obviously for a lot of the crypto long time, hodlers, those guys have been in this market for a long time. They've got that true held belief, but they've seen markets go up before, they've seen markets go down before, they've seen bubbles burst. And while the trend is obviously great, there's some cynicism, there's some suspicion from some out there, although I must say it is obviously rapidly waning as this bull market takes hold. But, what are you seeing that's different this time? How does this differentiate from 2017? I know you've said some of this before, but I'd love to hear your latest thoughts on this.
Look, 2017 was entirely retail, plus a few high net worth public figures like Novo. This time around, it's entirely different. So retail, the market's now bigger. Retail has an ability to move the market, but most of the hodlers have been in forever. Where at the margin of the flows coming from? Well, Grayscale is one. What does Grayscale do? It allows RAAs, registered investment advisors, and others to get access. Okay, that wasn't around before. Then we can add Square, Cash, and PayPal, recent additions to the market, which means that you and I can basically buy crypto instantaneously with existing rails. So that makes it easy. Okay, that didn't exist before. Then the governments have regulated it and basically said, this is fine. We'll make sure it's a safe space for institutions and investors to operate in. Now, that goes against the ethos of the cypherpunks and the crypto anarchists, but the reality is regulation brings in institutions. Then we saw the institutions coming. So this move up now is driven by institutional money, investment advisor money, family office money, corporate treasury money. That's wildly different. And the sizes of this money is a lot more. I mean, yesterday on Real Vision, I was talking to one of the largest financial planning firms in the US. They run 280 billion or something of that sort. That market is a $5 trillion market of investment advisors and planners. This guy is a huge proponent of cryptocurrency. He said, problem is we can't get access because it's a bearer asset. And a bearer asset is not easy for an investment advisor. And the investment advisors don't want to say, oh, just use Coinbase, because then they don't control the asset, right? The misincentives, the incentives are misaligned. So they're begging for this ETF. $5 trillion are begging for an ETF. And I'm like, what allocation are you telling people? And he's like, 1%. Okay, do the maths. This is enormous. So once the ETF goes, I mean, it's going to go batshit crazy, I think would be the technical term for it. And that's ignoring the fact that every day on the tape is a new financial institution or hedge fund getting into the space.
So then, it's very easy to get your head in the clouds, for people to want to get very overexcited, and I'm not saying they shouldn't, but I guess putting out a devil's advocate statement out here, just to sort of, maybe counterbalance some of the high air that's existing right now. I ask it a question: what kills this market, if anything?
At this current phase, I actually don't see much, because regulation is going in favor, not against. I think maybe once the central bank digital currencies come and the central banks then decide how we get on-ramp, off-ramp access, stuff like that, maybe it's that. Maybe there's a risk to something like Tether blowing up. Maybe there's a risk to the Chinese miners. Those are the unknowns. And we just have to wait and see on that. I mean, this is not without risk. It's a 60 vol asset. It has huge downswings. There are whole periods of time where it falls 90%, and the upsides are enormous. So this is not a market for widows and orphans. So yes, you can be bullish, but you have to treat it like an option where you understand that you could lose most of your premium.
Okay. And
I think one of the hardest things for the space to deal with would be it trending sideways for extended periods of time. That kind of frustration where it's not really working and other assets are doing okay. We've just seen that with gold. I sold out my gold for a similar reason, was like, it just wasn't performing.
Right. Right. All right. And then, so a nice, neat segue into the market itself, because we've been talking about this, either through the lens of Bitcoin or as the idea that cryptocurrencies are some sort of homogenous asset class, but we certainly know that that's not the case now. And you alluded to that earlier when you talked about your Bitcoin, Ethereum sort of allocation. Now, let's first start, do you see as the fundamental difference between those two coins, despite being number 1 and 2 on the market?
I just think it's use case, regardless of the proof of work, and regardless of how it's done, and all of the arguments that people want to fight about. It's like, who's building on what and who's building on the other, who's going to win that race, and what are the applications that's going to come? Ethereum currently is broader. Bitcoin has a very well-defined place where people accept it. That's its narrative. And everything like this builds on narratives. What it is in the future, what the Lightning layer and all these things do, who knows? And good luck to everybody building on it. Maybe that's going to be the place. Maybe it's just one of the ecosystems. When you look at Ethereum and you see the sheer number of projects, the bravery of testing of stuff that's going on, okay, that's interesting. This is a very different space. It has different, the smart contracts work better here. Now, there are other platforms too. Who knows where EOS or, a bunch of these other ones, or Cardano and all of these things, Link, I don't know. I'm not smart enough to figure that out because I'm a macro guy, so I tend to focus on the top level. But I know there's going to be opportunities within that. What I note and find interesting is there is a huge movement to be protectionist over your own cryptocurrency that you've invested in. I think that's probably an advantage for the space because it creates robustness around some of these projects, but it's also an advantage for investors because people aren't looking outside of the currency that they own. And that means you're going to get opportunities because people will not see change because they don't want to see change. That to me is super interesting.
And do you see that sort of that tribalism in the space as being in any way detrimental to the market, or does it just get dwarfed when these institutional players come on board, are the ones who don't have that same degree of stickiness or emotional attachment to a project?
It's kind of cute. It's like sticking up your favorite game. It's a football team. It's nonsense. It's the game of football that matters, not the team you support in the end. It's the world's biggest sport. It's not that one club is the biggest club in the world forever. And that's the same with this. The digital asset space is bigger than you, I, anybody else, all of these platforms added together. And people don't get that yet. They don't want to get it yet because they're still coming from the past. And the past fight in 2016 was which one of these new cryptocurrencies is going to win. That was a fight. And people defended their ecosystem. That's the old battle. Nobody cares. Literally nobody cares. It's now, can I figure out, okay, where are the best places to take my bets? What could outperform? What can't outperform? Where's the flow of money going to come into? What is the opportunity for alpha here? And when you've got a backward-looking narrative, it leaves a great opportunity for forward-looking investors because people aren't seeing the world with open eyes.
So then by that analysis, when it comes to the crypto game, has Bitcoin won?
No, it's won the reserve asset game. I mean, I don't see DeFi being built across crypto. I don't see gaming being on Bitcoin. I don't see gaming being built across Bitcoin, not in the same scale it's being built with over Ethereum. So it's not one everything. What is everything here? We're talking about an entire world where all assets get digitized and all the internet of value architecture is being built. Anybody who thinks that's just Bitcoin is probably naive. This is far too big. And I think a key function of this space is the interoperability between all of these different ecosystem and layers, because in 10 years time, 20 years time, we won't even know or care what blockchain or platform these things are on, because you and I will just be exchanging value over Zoom. And we don't care whether it was done over Ripple or Bitcoin. It just doesn't matter. People don't get that yet. This space is interesting because it has the behavioral incentives of a token built in, which creates a robustness within the system that creates the Metcalfe's law network effect because those tokens have value. Super interesting, but I think in the end, it doesn't matter.
Right, so then, I mean, sort of looking beyond just purely the investor case and the speculative case and the idea that this is a growing and nascent asset class, I mean, are there fundamental use cases that you're holding out for that may serve as tipping points for this industry, or from an investment perspective, it doesn't matter?
So let's just take the finance industry, because money is where this is going to get used first. Sure, there's going to be gaming, there's a few other bits and pieces. Digital identity is probably another one. But money. Okay, so what are the structures of the current system that are problematic? Transfer of payments. Okay, fine. There's a bunch of platforms that are offering transfer of payments. That's one. Custody, storing of money, that's another. The value of money itself, that's another. But then when you get into the guts of the entire financial system, you've got monster things like settlement and a settlement's like T+2. It still takes 2 days to settle anything. It's kind of netted off. It's kind of aggregated. It's a mess, right? Blockchain solves all of that. Then you've got custody, which is even bigger. I mean, the DTCC alone in the United States, custody and clear a quadrillion of assets every year. Problem is that entire thing is held together by the illusion of segregated accounts. So we kind of think our money is safe in that clearing custody. It's actually not. At DTCC level, everything is blended. So if a large collateral like Sovereign or back in 2008, AIG were to go bust immediately, you basically break the entire system. All of that can change with blockchain. We have an enormous problem with the entire derivative clearing markets as well. That's another quadrillion-dollar market. Now, that needs ownership. Blockchain solves that. So, I mean, that's just part of money so far. I mean, it's extraordinary. And once you digitize everything, then that's a change. Then we go to the central bank digital currencies. And that changes everything because now I'm the central bank. I can give you directly money and somebody else directly different money. I can give you and me a different interest rate. I can give you and me a different stimulus payment without having a bank in the middle. So that means that's the end of monetary fiscal policy as two separate things. They become the same. So that's a revolution of economics. Now, what's also interesting is we've been using Keynesian and monetary economics for all of our lifetimes. Well, this is going to be the rise of behavioral economics because incentive-based systems are what you can do when you can directly incentivize people different ways. You couldn't do it with banks in the way. So central banks will be able to, and governments will be able to do that. It could be nefarious, it could be good. So, I mean, if that's not big enough, then I don't know what else, this is enormous and it's all coming.
But I mean, the sort of picture you paint just there, I see as a boon perhaps for the blockchain technology as an underlying tech in the overarching industry. But as you alluded to already to a degree, that once the CBDCs come on board, once governments turn around and not just regulate this space, but actually start to take an ownership stake in this space, does it not risk undermining the existing assets, or do you think this is a rising tide lifts all ships?
This system. I mean, it is capitalism at play. And those that don't innovate will die, and that's fine. I find it pretty difficult to believe that Bitcoin dies because it's so elegant in what it does, and it's so good in what it does as a store of value that even if every other use case of Bitcoin fails, it's still a brilliant asset, and the central banks can't do anything about it. So, for that, I just think they accept it like they do gold. It's just an asset that people can use if they want to get out of the financial system. They will regulate your on and off ramps. So listen, this whole space is going to be a boom bust like the internet was. Who knows where it's going to lead to, but but huge change is coming.
I mean, in that vein, you tweeted back in late October a tweet which kicked off with the line, "Bitcoin is eating the world." Can you elaborate a bit on that, particularly in the wake of the conversation we're having?
Yeah. What that really means, and I'm not talking it in the way that Mark Andreessen talks about software as eating the world. I'm really talking about what it's doing versus every other asset. I mean, it's almost impossible to not own Bitcoin right now because it's outperforming everything. I've never seen in all recorded history an asset, not a security, a single security, an asset perform like this. I mean, it's unparalleled because it's the network effect in play in an asset class. I mean, we've never seen this before because it didn't exist before, because this is technology, right? Couldn't have existed at any other point in history because gold doesn't have other applications. It's gold. It doesn't have a technological layer that you could build on top of. So this is, I call it a call option on the future. But and again, the more it goes up, the more it sucks everybody in. And it's basically, and there is no other asset. Ethereum's done pretty well. Outside of Ethereum, which I don't think of as an asset class, I think of it more as a security in itself. But there's no other asset class that's come close. So it's basically like supermassive black hole, because if you're a hedge fund manager, how can you not own it? If you're an asset manager, how can you not own it? If you're an individual, how can you not own it? It's that ridiculous outperformance. It's not a marginal outperformance, like banks versus gold, or they've moved 50% against each other. This is, I mean, by ludicrous margins. It's so dominant. So that's what I think it is going to eat a massive hole in everybody's portfolios, in terms of it's going to grow in size in everybody's portfolios.
All right. So, I mean, on that positive note of what the Bitcoin space is, and what the crypto space as a whole is, I want to flick now from moving away from sort of investing strategies and that sort of focus to talk a little bit about the work you guys are doing there, and you're spearheading over with Real Vision. I've spent a fair amount of time, with my head stuck into some of the excellent videos you guys produce in terms of that sort of educational content, that informative content, academic content. And I guess my question is, what is your goal, with that space? What is your goal in terms of educating the public, or putting information out there?
I've been in the financial markets my entire career. I've been really lucky. I've been at the epicenter of it. I started and ran the hedge fund sales business at Goldman in Europe in equities and equity derivatives. I then ran a global macro hedge fund for the largest hedge fund firm in Europe. I then opted out of the rat race and moved to Spain and semi-retired. And I now write macroeconomic research that's read by the world's biggest hedge funds, sovereign wealth funds, family offices, government organizations. So I've been at the epicenter of this whole thing. And what was interesting is when I was in 2008 and 2012, and I was living in Spain, I'd been writing about this and predicting it. And people came up to me in the street and said, "Why didn't we know?" And I was like, okay, we all knew, you didn't know. Why does that not happen? And I felt I had a moral duty to do something about it, because my parents' friends were getting wiped out in this situation. Cyprus was an extraordinary situation where they bailed in everybody. So that made me think about it. So it took me a few years, took me 2 more years before I met the 3 other co-founders of Real Vision. And we realized that, okay, let's think about video, because that's the new medium. How do we reach the most number of people with the content that they need? What can we give them? What do we have that nobody else has? And it's my Rolodex. It was access to the world's most famous hedge fund managers that nobody would get to meet. They wouldn't even know about. But I knew them all. So I called a few up and said, listen, we're thinking of starting a video channel where you can come on and not have a 3-minute soundbite like CNBC, but you can come on and tell us what's on your mind, how you think about things, how you invest, where the risks are, where the opportunities are. Would you be interested? Look, all hedge fund managers have an ego. They're like, yeah, of course. And once one comes on, another comes on. It's the same with all the people buying Bitcoin, right? So that was that. And what happened from day one is people went, oh my God, we've never had information like this before. And so we built on that. And then the first video we ever did, or second video, was also about Bitcoin. Because I've been a long time in this space. I knew what was coming, which was the collision of these 2 worlds in the next recession. So I knew I needed to educate people about this. And so I spent basically 6 years doing that, helping educate, moving these narratives forward so people knew it. I mean, Real Vision doesn't have a view, but if there's an important emerging asset class, we will talk about it, much like we talk about investing in Iran, or we talk about African investments, stuff that people may not understand yet, but they will in time. And so then we decided this year, we got approached by many of the big kind of names in the crypto space. And they said, listen, Real Vision stands for in-depth analysis, education, and a level playing field. That mission of democratizing the very best financial information and having balance between, somebody who's bullish the dollar, bearish the dollar, long bonds, short bonds, deflation, inflation, and treating everybody with respect. All we want to do is learn from them. They said, can you do that for crypto? Because it needs it. So we launched Real Vision Crypto. So we teamed up with some partners, BlockFi and Silvergate, to make it free. So they shared in our idea, and we said, look, we could charge a subscription model like we do for Real Vision itself, or let's make it free and give it to everybody. So that's what this is about. And the same journey we took in macro, we're going to do here, which is we're going to get people to see the big picture, educate them on all parts of it, regardless of where you are on the journey, whether you're a deep expert, whether you're really technical, or whether you're the noob coming into the space saying, okay, what do I need to do here? That's the whole point. And again, it's really about educating and helping people make better decisions.
So then I guess as a follow-up, and I always wonder this, as myself as a person in the crypto media space, but just generally, the people that are interested in this world, the people that are interested in this space, along that spectrum that you just described, they'll go out and they'll find that research. They'll, live by the adage of don't trust, verify, as we like to say in the crypto space. But what about those that aren't necessarily willing to go out and do the research themselves? I guess it's a two-part question. One, how do we get them to take on that education and take on that awareness? And two, should we be aiming to? Should that matter? Should the next billion people we want to try and get into the crypto space truly be educated if they don't want to go out and research it themselves?
Crypto's not for everybody yet, for starters, because of the risk profile. And look, the platforms are not easy enough yet. It's a bit difficult still. So it's not for everybody, but it's sucking in more and more people. People in the periphery are all coming in, I was with my yoga instructor this morning, end of the call. She's like, yeah, Bitcoin's doing really well. She asked me to pay her in Bitcoin. I said, out of my cold dead hands, will you get my Bitcoin? But she's like, okay. And it's only because she knows me, we're old friends, that she got aware of the space. But it's that word of mouth. It's that, and it's having, quality podcasts. Different people play a different part of the ecosystem. And there's a platform like Real Vision where there's a lot of content, and we've got all the macro content, so you can understand the broader context of why this all matters within the global economy, global financial markets, and all of that stuff. So there's a lot of people working different parts of educating. It's coming, and I think different people will be able to take different parts of that journey.
Certainly, an important sort of question about the future of the industry, where people take it and where they won't. But Raoul, I want to thank you so much for really taking the time to speak with us here today at REIMAGINE 2020. I guess one last point before I let you go, is looking forward, here we are at the end of 2020. I guess we already have to start doing the look ahead to 2021. Any particular trends you're watching out for? I'm not going to ask you to make a prediction because no one enjoys doing that in this space anymore, but any sort of macro trends you're watching for the year ahead?
Look, outside of Bitcoin, which will be my biggest bet next year, unless something dramatic changes, and the whole digital asset space, I think the thing to watch is the dollar. The dollar's been messing around in a sloppy, large range. It's the weakest part. I don't think it remains weak. Watch what the dollar does. If the dollar makes a move, it sets us up it either goes up dramatically into a spike, which I think is still possible, feeling less likely, but that has been my base case. Maybe it's going to be wrong. If that is the case, then we've got some real big issues and a much faster move from the IMF and others to try and move away from the dollar as so dominant. 80% of all the world's trade is in dollars, and the US is only 25% of global GDP. So we got this huge problem, mismatch, the number of dollars needed, number of dollars available. So watch that. If the dollar weakens, well, it sets us up for other things, which is you can buy emerging markets and basically go to the beach for 10 years. That's how they work. A slightly weaker dollar, post-crisis, and they did better job. Many of these nations did a better job with the pandemic. So they've got better balance sheets. Well, that's setting us up for a decade of emerging market outperformance. Be that India, who didn't do a better job but has phenomenally good backdrop, or whether it's other countries around. There's a lot of opportunities, places with young demographics, low debt, and dynamic economies. So I'm excited about that. And that's, again, on Real Vision, we're following those journeys as well.
All right, well, it seems like regardless, we're in for an exciting period in the near, mid, and long-term futures ahead. Raoul Pal, thank you so much for taking the time to speak with us today. And for everyone watching, make sure you stay with us for the most excellent content here at REIMAGINE 2020. Thanks for watching.
Great, thanks so much.